Welcome back. You're watching us here on Bazaar Morning Call. Let's get in Deven Choksey now of KRChoksey to give us a few, fundamental thoughts on the stocks that he's tracking. Deven, I wanted to know your thoughts on the cement pack and India Cements in particular, because there has been a lot of deal flow around this sector itself. Yesterday, the India Cements news that came by, the street was anticipating that maybe they will sell some part of their Banswara unit as well, and valuations are not supportive. What are your thoughts after an 11% correction that we've seen on India Cements?
Yeah, good morning, Mangalam. Overall, I think the cement mix looks promising from the point of view of, I think, demand that we are seeing in the country. With post-monsoon, I think with the activities gaining momentum, expected demand, I think, rise would be significantly higher, and particularly because of the government projects continuing. So in general, I think for all the cement companies, I think the demand scenario should remain needed to be more stronger. In some of the pockets in particular, I would think that I think the pricing along with, I think the demand would probably remain relatively higher, particularly in the Western belt, I think, as we are seeing it. So all in all put together, I think the per se the industry outlook remains positive. Particular companies like India Cement, even for that matter, I think the one which are there in southern pocket, Ramco Cement, and I think pan-India presence with Ultratech and Adani Group now, which is ACC and Ambuja. All in all put together, I feel that I think some of the select pockets, I think the companies would do well. Not too sure about immediately about, I think, the India Cement, but I see the corrective strategy happening as far as I think the business is concerned. Many of the weaker business areas, I think, are being corrected, and possibly, I think, the focus is on the efficiency. And that is where I think one could possibly bet on this particular company. The proposition remains quite strong as far as I think the efficiency-led growth is concerned for India Cement.
Okay. Deven, hi, good morning. How about Infosys? You must have heard about the President Ravi Kumar resigning, and this at a time when the company and the industry is going through many challenges, right? Would you keep the faith here, or do you think that Infosys could start to underperform the rest of the pack?
Yeah, good morning, Sonia. Well, I think the company is definitely showing a good amount of progress in last few quarters. The new order or the deal wins, I think, as we call it, as I think have been remaining extremely, I think, strong all these quarters. And I think the promise is that I think it is going to remain, I think, stronger going forward. The major challenge, as we understand, I think is going to be in execution. Given the kind of a challenge that one is facing as far as attrition is concerned, and given the kind of challenge that one is facing as far as uncertainty in the global environment is concerned, some part of the order execution might come under pressure. That is, I think, the fear that one is having. If we get the positive commentary from the management like we did from TCS, then in such case, I think the company looks, I think, relatively stronger. I would keep one ratio in forefront. How much is the deal win as far as I think this quarter is concerned, and what is the execution ratio, I think, on a quarter-over-quarter basis. If that number is remaining above 1, probably I think I would not be disappointed with any kind of, I think, the negative news, including leaving of some individual from the company. So I think one will have to keep an eye on this aspect. Of course, I think the profit margin is important, but I believe that I think given the kind of depreciated rupee and the dollar revenue that they clock in, I would think that I think the amount of cost pressures would be adequately met with the rupee depreciation, which will probably protect the margin between 20 and 23%. So let's see if they continue to maintain the guidance on 14-16% constant currency growth, and I think the margin of around 21-23% on EBITDA front. Then I think the company should be reasonably all right, I think, as far as adding into the portfolio in every correction.
All right.
Okay, Deven, stay on. We'll just come back to you in a bit. Perhaps a stock that you may also track